Let's get to the big deal news of the day. Chevron completing its acquisition of Hess after an arbitration panel cleared the way for their merger. $55 billion total enterprise value for the deal, including debt. Chevron CEO Mike Wirth joins us here at Post 9. First on CNBC to discuss the deal. Welcome.
Good morning, Sarah. Hey, Carl.
Good to see you. It's a big day for you. You have been confident all along that you would prevail, and now you got the word. How's it feel?
It feels good. We have maintained from the beginning that this is the outcome that we expected. It's a straightforward interpretation of contract language, and we're very pleased that the transaction has now closed. Creates a premier international oil and gas company with strongest upstream portfolio in the industry, highest cash margins on our upstream production, one of the largest producers of both oil and gas in the United States, largest leaseholder in the Gulf of America, and industry-leading free cash flow for share growth, not just for the next couple of years, but into the next decade. So good for Chevron and also good for the industry because it affirms a long-standing practice that asset-level rights of refusal don't apply in corporate-level M&A transactions.
I'm not sure that Exxon would agree with that. I mean, it's been a dramatic 20 or so months since you first announced this deal. It was unusual for Exxon to come at you like this with a fight and that, insist that they have the right of first refusal. What do you think was really going on here? Why do you think that Darren Woods took on this fight with you?
I think they'd have to speak to that. I can just tell you it didn't have to be this way. This took a long time. It's unfortunate that Hess's shareholders and employees have been put through this for nearly 2 years on something where, in our view, the outcome was never in doubt. This was plain reading of a contract, and the arbitration panel saw it that way. This could have been resolved much more quickly.
You could have resolved it sooner if maybe you settled. Did you ever look at doing that?
Well, the facts were on Hess's side in this case, and I think the incentive to settle and to give something when you're right, I think that the decision was made to stand and defend what Hess believed, and we also believed was the right interpretation of that contract.
So does this now change the balance of capex versus capital returns long term?
No, it doesn't. It strengthens long-term cash flows for our company. It deepens our already deep resource position. We've had a very consistent track record of dividend increases, 38 consecutive years where we've increased our dividend payout. Share repurchases, 18 of the last 22 years. Record share repurchases the last 2 years. This provides the cash flow that will continue to support that. And we've got a very strong balance sheet. We've got AA credit rating, low net debt. And this just creates an even stronger foundation upon which to continue that track record.
The Times today characterizes the production backdrop as tricky for producers because on the one hand you do have a lot of deregulation and easing in permitting, and the administration clearly wants that, but they also want a low raw material cost. And how does that affect producer psychology at the moment?
Well, it's a long-term business, and we lay out our plans and look to develop in a capital-efficient manner. We've been growing our production. We had record production in the U.S. last year. I expect to have record production in the U.S. again this year.
For yourselves and the industry?
For ourselves and the industry, yes. And we're closing in on 1 million barrels a day in the Permian Basin. And so we've been steadily growing our business here in the U.S. and investing in it, but doing it in a capital-efficient way that can generate the strong returns on investment so we can return cash to shareholders.
You have said that this deal has been an overhang on your stock. What you believe. So now that you're past it, first of all, I'm curious how you look at Hess differently, if at all, because it's been almost 2 years from when you originally said you wanted to do this.
The deal looks better today at any price assumption than it did when we went into the deal 2 years ago. Hess's business has performed better than we assumed at that time. We've got a very strong view now on synergies. We've been prepared to integrate this. We'll be cash flow per share accretive by the end of this year. We'll deliver $1 billion in run rate synergies by the end of this year, and so the deal looks better to us today than it did at the time it went into.
So what about the relationship with Exxon? Where do you go from here? Because you partner on this project and other projects, but it got messy.
We partner with companies across the industry around the world. It's the nature of our industry. We share risk. We pool talent to develop resources, and so we'll continue to do that. We have partnership as one of our core values. We pride ourselves on working hard to be a good partner with all the people that we partner with around the world. And we're partners with Exxon in a number of places around the world. And I expect that our people will work well with them in Guyana. Many of those people will be former Hess employees who have been working on this asset for many years already and who have been part of the team that has created the discoveries and the value that's been created in Guyana through the years before.
Speaking of employees, you've been pretty aggressive on headcount reduction, right? Does that continue? Does that get offset by this closure, the deal of closure?
Well, we'll integrate the two companies. As is typical in a deal like this, there are some overlaps, and so you see some reductions. But our industry is like many others where you have to continually look to be efficient. And technology evolves. It's a competitive world out there. As you said, the price environment is one that demands efficiency in our industry to continue to invest. And so that's one of the realities of our business that has always been true and I think always will be true.
Is the effect of the technology on productivity more pronounced in the discovery or the production right now?
Well, my expectation is particularly the things we're seeing with AI and information technology, it'll be across the life cycle of an asset that we'll see improvements. Everything from processing seismic data, which is massive volumes of data that we collect when we shoot 3D seismic, that can take months and months for us to process. We're seeing that processing time dramatically reduced. And all the way through the life cycle of operations to retirement of assets, I think we'll see productivity improvements and efficiency improvements from technology that will be significant.
Mike, you also got some good news yesterday from the FTC, where John Hess can now serve as a board member. Previously, FTC wanted to ban that, which I think speaks to the overall change in the regulatory environment in this administration. You had complained about the Biden administration, the tone on oil, the regulation. How different is it right now?
It's very different. We've got an administration that sees American energy as a resource, that wants to see investment in American energy, that wants to see the American energy industry succeed. That is a big shift from where we've been. When it comes to the FTC decision, I am especially pleased to see a unanimous decision out of the FTC to reverse what I believe was an incorrect decision previously to deny John Hess the ability to be considered to join our board of directors. He's an outstanding executive. He's a respected leader. He's got global experience that would benefit any board. And certainly our intent at the time of the transaction was that John would join our board. Now that this prohibition has been removed, my expectation is that our board will take that up as a matter of business at our next meeting.
It's all happening. You praised the administration for deregulation and valuing energy as an asset. What about tariffs, though? Does that hurt the industry?
Well, I think it's a broader issue about the economy that you've covered well. And I think the president's laid out his beliefs on tariffs. Our industry will have to deal with those as many others do. We've got plans to try to mitigate the impacts of that, and we're working those aggressively.
Where does it hurt the most? Is it the building of materials for infrastructure?
The biggest challenge is in certain specialty inputs to our industry that are manufactured in maybe one or two places in the world, and those tend to be outside of the U.S. It can raise the cost of those inputs. I think on a lot of the other inputs, we've got over time the ability to try to move sourcing to lower tariff countries or domestically source materials. But there are, whether it's specialty grades of steel or specialty equipment, there are some things that we use in our industry that are made by one or two suppliers in the world. If they're outside of the U.S., those commodities. Yeah,
reports always zero in on steel pipe, right? And I imagine drills, things like that. Has that been material?
We've been able to manage that. We domestically source a fair amount of our line pipe and drill pipe. There are certain drill bits and tools that go down into a drilling hole that are specialty items that are made overseas. And so there are elements of the drilling process that are affected. But thus far, we've been able to, I think, successfully mitigate the largest part of any of those impacts.
And on the flip side, are you part of the trade negotiations, these deals? I think I saw that in Indonesia, for instance, there were MOUs signed with energy companies, U.S. energy companies, Chevron may be among them.
You know, we've had a long history in Indonesia. We've recently reduced our footprint over the last few years, but we work with the administration on a variety of things, trade being one, AI, power for data centers being a second. So we're engaged in discussions across the board. And I have to say, this administration wants to hear from business. And whether it's the president himself or his cabinet secretaries, they proactively reach out and seek input on a regular basis. I can't tell you how pleased I am with the amount of dialogue that we have with various representatives of this administration. It is a sea change from what we saw before.
What are you telling them?
Well, it depends on this particular topic, but we provide input on what we think are good technical solutions, good economic solutions to some of the challenges that they're engaged in.
The tone, the administrative tone may have changed, but it didn't keep U.S. producers from hitting record production numbers last few years. We became a net exporter. I wonder how much you think that friction, how powerful that friction is that we saw.
It speaks to the resource depth in this country in energy resources, and it speaks to the capability of U.S. companies to develop it. So even when faced with headwinds and policy that was discouraging investment, this industry has the ability to still find ways to deliver economic outcomes with a more balanced approach from a regulatory standpoint and more reasonable approaches to things like permitting. I think you'll see us continue to invest, and if we can reduce costs, those things tend to flow all the way through into the market.
Given your vantage point on the end markets and global demand, what do you think the read is right now on the economic outlook?
I think the economy has held up much better than a lot of people expected it to. I think the conversation I heard as you began the show today, the economy is in a solid position. And notwithstanding a lot of the uncertainty and some of the ups and downs that we saw earlier this year, everything we see at a fundamental level remains very, very solid.
So, final question, back to the deal today. Are there other pursuits now for you, now that this is going to be behind you?
Sarah, we're going to focus on integrating Hess and doing a good job. We've worked for nearly 2 years to prepare for this. It's a big transaction. It's an important transaction. That's where our focus will be.
All right. Well, we appreciate you sharing the moment here with us and our viewers. Mike Wirth, always good to have you. Thank you, CEO of Chevron.